Hey everyone, John Henry here, and today in the market psychology video, we come back from the Father's Day weekend with some very happy buyers. We ended last week Friday with a huge run at the end of the day, big bullishness going into the day, and then we end up with a big gap higher and more bullish follow through. That's a really big clue that we have a huge amount of buyers in this, and they are very happy, especially if they've been holding since that last week Friday, buying into the close of that and then opening up, a dollar higher and then seeing more bullish continuation. They're going to be selling out of their position. They're going to take some profit off the table. And can you really blame them? I can't say that I would be upset with taking a dollar profit coming back from a nice weekend with the family, right? So easy look into what's likely going to happen here just off the first couple candles. We know that the buyers are still interested, but the problem is they don't want to buy this high. So we know that we need to be looking for a pullback to then buy to go back up towards the highs. We also know that buyers from Friday are going to be selling out, assuming, hey, thanks for the gift, market. Let's just take our profit, which means that there are going to be sellers, and that's going to cause some selling pressure back in the opposite direction. So what we're looking for is a reversal into a reversal, right? We want the buyers to take profit, cause the market to drop a little ways, see the buyers start coming back in on nice cheap prices, and drive that market right back towards the highs. So we open up, strong bull candle into a weak bear. Not good enough to sell until we get this guy right here. Beautiful bear candle closing right on its lows. Now we know that is the case. That's what's going to happen. At the worst, we're likely going to go back to those lows to see if we can maybe trap out some buyers that tried buying this first candle. So we push down, beautiful sell all the way into those lows. We get down into the lows where we begin seeing some buying pressure coming back in. And this is actually even more exemplified by the fact that the sellers had terrible follow through. The buyers come in here, sellers try swarming them, no follow through. Terrible news for the bears. If the bears sold that, they hate everything about this. And if it comes back down, they're probably just going to get out, right? It goes back down again, gets all of those sellers out that were a little bit more aggressive on exiting early, and immediately turns back in the opposite direction. So we know that the sellers are losing their grip. They don't want this anymore, and we turn back around for a beautiful signal bar right back in the opposite direction to tell us to get in. That's what we're talking about, right? So a beautiful buy right off the lows there, knowing that we're anticipating a rise back up towards that high of day. So just a gorgeous early entry right there. Now, in terms of early entry, a lot of folks don't like taking those early entries because they're seen as a little bit more aggressive. So what we need to do now is see what the bears can do and wait for them to fail. And this was actually the trade of the day, so you can watch that back, make sure to see that. But we push in and higher. The sellers try taking over. Terrible follow through. Sellers jump in because they know, hey, this is a nice move down. Maybe we will get that second leg down. So they try selling it. And they are immediately wrong and stopped out. Now notice what happened here. We hit this area of resistance and we get stuck for a little while. That's going to get sellers trapped in again. Sellers are going to see that as an opportunity to try to take it lower, and they try it right there. Big bear candle, really weak bear candle, but a big bear candle. They sell that and they are immediately wrong once again. That's the second time in a row now that they've tried getting in and completely stomped. And look at the candles versus on the bear side versus the bull side. Very weak, lots of wick at the bottom, small bodies, not really convincing. And then look at the bear bodies, right? Look at all these. Beautiful bullish movement, stopping out all of the sellers that tried to take it into a gorgeous run higher, closing very high on itself, showing that the buyers are taking back over. And another beautiful reason to jump in, knowing that we still haven't hit the high of day, and that's probably where we're going. So just an absolutely gorgeous morning today, coming back from a nice Father's Day weekend. And what a better way to do it than coming in on a huge move higher into a beautiful reversal right back up towards the highs. So that's going to be the combination of market psychology and technical analysis. You can't really ask for a better 1-2 punch, and that's going to do it for me. So if you have any questions about it, feel free to send an email into School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.